All right, guys, we're going to jump back in with James Thorne, who has been on the show before. And today we're going to dive into just about everything macro that you guys are going to want to make sure and pay attention to. I want to thank our sponsor today, and that is Uphold. We've all been there. Expenses pop up right when the market's starting to heat up. It's not the right time to sell. The last thing you want to do is sell your Bitcoin, your Ethereum, your XRP, or even your stablecoin, USDC. This is exactly why Uphold launched the EXA credit card. When I found out about this, I was blown away. It's an instant line of credit that lets you borrow against your crypto without having to sell. All you have to do is just use your assets as collateral and spend it worldwide using a virtual Visa card. This is the coolest feature I love about this. There are no credit checks, and you can repay on a schedule that works specifically for you. It's the smartest way to stay long in the market while accessing your portfolio's value today. Download the Uphold app and get your virtual EXA card in just a few taps. James, how are you?
I'm doing great, Paul. How about you?
Good to have you back. We had a really good, lively discussion the last time you were on, and I thought, well, hey, this is definitely the time to be talking about it now, because we are seeing quite a bit of shifts, not only from a macro standpoint, but definitely from a strategic standpoint, I think, for many companies and investors that are really starting to draft out maybe a 5-year, 10-year, and 20-year plan on investing. So, first of all, give our audience a little bit of background on what you're doing right now, a little bit about your organization, so they can kind of get a breath of that.
Sure. Quickly, I grew up in Toronto. My dad was American, got a PhD, went to the States, worked for a couple of decades, came back here to Toronto, and we're building out Wellington Altus, which is an independent platform up here in Canada, which is touches, feels, and tastes like an American platform.
Yeah.
And we're just crossed 50 billion, and we're growing really
Ooh.
fast. What I do is I help teams manage money, and I also am thought leader. So I get to basically take a leading edge view and try to position or brand us as one of a global leader in terms of thought leadership and investment management.
Who is your primary client? Is it mostly family office or investment advisors? Who do you guys focus on?
Well, the growth strategy is really roll up, right? We're basically asking, we're a lot of corner offices teams
Okay. Yeah.
are coming and joining us. And then what we're trying to do, I mean, remember the competition up here is dominated by the banks. And Paul, you're in the States, right? And in the
Yep.
States, look, I worked down there for a couple of decades, is, you don't go to a bank for investment management.
Exactly.
And up here, it's been dominated. So, what we can do, what happened was the independent platform or the independents used to control the business up until 80s, and then the late 80s, and then the banks took it over. But true to being a unique aspect of a Canadian is we're not very entrepreneurial. So what would happen is you didn't see, back in the States, you and I would run a local bank. We'd sell it to somebody. We'd have a 2-year non-compete. And then after the 2 years, we'd get the band back together again and do it all over again. We don't
Right.
do that up here.
Yeah.
So what we're trying to do is just basically do the independent, high-end independent investment management, tax planning, what you would get in New York, what you would get in the city of London.
Yeah.
And, what we're trying to do, what we are doing is taking market share away from the banks.
Good for you, man. The banks need to exit that business, because I think this is a bit of a different structure now, especially with the breadth of the markets as they are. You look at everything that's happening overall. I'll share with you something that I never thought I would see anytime soon, and that is the S&P 500 now on track for 9 consecutive weeks in terms of an upside. Where does this stop, James? I mean, I've heard Tom Lee, he's been pointing at 7,700 for a while. Do you have any insight on this?
Well, yeah. So let's go. I have a few, right? And so history rhymes, right? And so if you're an old guy like me, you like technical analysis, right? And the key to technical analysis or cycles is the 4-year cycle,
Yep.
which if you're into Gantt work, that's actually the 20-year cycle and the 60-year cycle.
Mm-hmm.
The problem with that is that, and that's what Wall Street, here for your listeners, that's what everybody anchors on as a secret sauce that nobody tells you about.
Right.
The problem is that, President Trump basically circumvented the 4-year cycle last year when we had that 20% correction in April. And if you go back in history and you say, ask a simple question, go to your AI, go to Perplexity or whatever your favorite, Gronk, whatever, and say, has there ever been 2 years in a row of down 20% years outside of a recession or a financial crisis?
Right.
And there's never been one.
Never been.
So then I'm sitting there saying the 4-year cycle is dead. Okay. And then if you go, well, if that's the case, and this is a significant low, like the 09 low, or, what does this look like going forward? And when it looks like going forward, when I came into this year, assuming that, right, that we're not going to have the classic midterm election cycle, 20% drawdown, which I would say some of the folks that you've mentioned, that's what they came into the year with. And I pushed back on the 4-year cycle. So if I would say I came into the year saying I can get you to 8,000 this year,
okay,
with a stretch of 8,400.
Wow.
But let me just be clear. And we will have a normal and natural healthy correction. History says we can run to somewhere like this time next year and run to like 93, 94, and then have a 10% correction and finish off at the end of next year at 10,000.
Wow.
And then go from there, go from there, 15,000 by the end of the decade, by 2031.
That's crazy. I'm looking at that would be a super cycle that has never been done before. We've seen obviously the centrifugal force of technology, innovation in a lot of different areas. You look at blockchain, which we talk about a lot, AI. Now we've got space on the cusp of with a potential SpaceX IPO that could drive this up. Now, I've listened to Tom Lee for a while, and he's wrong sometimes, he's right sometimes. He's got a very interesting spin on this. I want to show you something here, and I want to get your opinion on this. So this is Tom Lee talking about this thing they're calling a 3-phase market this year. It's a rally up to 77 is where he's calling for. A little bit of a cool off due to the Fed. And then some energy shock with the shortage coming out of Strait that would be rolling effects into the market. And then these large IPOs that I'm mentioning. And we'll talk about SpaceX and Anthropic in a little bit. But post-midterm election rally. So would that be somewhat similar? Do you think we would have a little bit of a sidestep here at and around 7,700 to 8,000 this year? Or do you feel like this is just a blow through? We're going to see a full run through all the way through the end of the year.
Yeah, I think we run into July 4th, right? And then whether it's 7,700 or 8,000, and you were lucky enough to be invested and ignored the noise, then you would most likely take the summer off, right?
Yeah.
Enjoy it. Take if you're running a portfolio with a beta of 1.3 or 1.25, take it down to 1, and just come back. Enjoy the family. Go to the lake or go to the coast, and come back in September.
Yeah.
So I the other thing I would just add to this is Paul, what's starting to come out is the retail investor is really starting to engage in this, right? So I think it was Citadel just came out with some data.
Yeah.
I think Mark Andreessen, his firm, dropped a great article on it today about the fact that retail investing is at an all-time high. Okay. And so, looking at the action of whether it's Dell or Micron, or you can see the FOMO all over the place, right? And the question we have to ask ourselves is if the institutional investors became in this year because they were bearish because of the 4-year cycle, right? I mean, this is off, Stock Traders Almanac. This isn't Cold Fusion.
Yeah.
And so you're sitting there at the end of the second quarter and you're 500 basis points behind your bogey, right? And you're not offensively disposed. And we do get a couple of percent correction in the summertime, 3 to 5%.
Yeah.
The old term that the traders on the New York Stock Exchange would say, are there going to be firemen under the window catching it and reloading?
Yeah.
So I could I accept going to 8,000 by July, like the end of the second quarter, and a chop during the summertime. Fair. I get that. I just don't think it's going to be a chop. I don't think you see a big correction, right? Because think about it, Paul. We had in the first quarter, we had what? The debt crisis.
There's a lot of hits
We had
for
the
sure.
software AI was going to eat the world.
Yep.
And we had the 50-year war that you and I have been talking about since we were kids, when the strait was closed and we were going to get $500 oil, and we had a 8 to 10% correction. So sure. But at the same point in time, I mean, and then what markets narrative follows price, right? And so does that mean, do we get a chop because Warsh is the new Fed chair, and you go back and you say, every time the Fed comes back, new Fed guy, we got to test them? I don't know. And then you sit there and go, well, what about SpaceX and IPOs? And at the surface level, of course, the knee-jerk reaction is yes. But think about this, right? We've got, since the 90s, you and I were chatting about when we got into the business, the number of publicly issued shares is down 50%.
Yeah.
And then let's talk about, big pools of money. They're overweight privates and underweight publics. I don't know if you were sitting there, and I'm not talking about the insiders, right? These guys that have worked at SpaceX and they want to blow and buy themselves a Lamborghini or whatever they do, right? Midlife crisis. But if you're sitting there and you're a big pool of capital, would you possibly sell SpaceX, which could be by the end of the decade the most dominant company on the face of the earth?
Could be, yeah.
I think it remains to be seen. But given all these confluences, and you get a run to 8, which was my year-end target by July 4th, sure, let's chop for a while and consolidate and grind sideways.
Why do you think that we have seen crypto detach so solidly from where the traditional markets are right now?
I think the retail, the short-term retail running for the next shiny object is trading Micron and trading Seagate and trading Dell. And, they traded gold previously. So, Paul, we are going through this period of time where the market is re-rating. Gold re-rated.
Capital rotation.
We finally had that trade in gold that we were expecting for decades. Micron is finally getting its due when, the old thesis that it was a short cycle company that went cash flow negative in the down cycles,
right,
which was disproven a decade ago.
Exactly.
But you couldn't get, so now it's everybody's running around going memory. I mean, so I am, it's buy low, sell high. And what I would say to you, Paul, if you can't buy, if you look at what is happening in crypto, you look at the positioning and long-term fundamental backdrop, and you don't see at 72,000 that this is a generational opportunity to buy if you don't own, I can't help you.
Yeah. Well, I think a lot of people are in that boat because they have traditional investors are now looking, they're putting the lens on crypto maybe for the first time because we've seen regulatory support, obviously the administrative support, but also the market conditions have kind of lined up. So the stars are definitely in place for this to become a very interesting time. Definitely a wealth building era for sure. Let me show something else to you because this when I saw this, man, I almost went into PTSD. And there's a reason for this because I lived through this thing called the dot bomb. All right. And I was a young engineer. NASDAQ returns right now, or back then, 875 days since the birth of the internet were 144%. NASDAQ returns 875 days since the birth of ChatGPT, now at the same 144%. So I go back to December of 1994. I'm leaving college. I'm heading over to work for Microsoft. We were in a deadbeat battle with Netscape because we were in the, not in the pole position. Netscape was. And then, of course, you have ChatGPT, almost an identical framework of what happened back then. Are you at all concerned about history rhyming here?
No, because it's different this time in the sense that we didn't have the earnings support
Right.
in the 90s.
Exactly.
We have
Yeah.
the earnings support now. And
Yeah.
so if you just forget about where we are, just like I don't want to talk about, let's just forget about Trump. Let's and America first and
Right.
supply side economics and
Mhm.
100% tax deductibility of capex and AI and winner take most and crypto. Okay, let's just leave. And you sit there, and I can easily build you a model that basically gets you to 600 to $650 in earnings by 21. By
Yeah.
31.
31.
And then I can get it higher than that too. And then I can go from a 22 times to a 25 times.
Right.
And I would say, Paul, when we go back to the 90s, forwards were 49. So what is different is this is earnings based. This is not you and me building not going to
Yeah,
grad
it's not a blue
school,
sky.
getting a white paper and
Exactly.
starting an internet company
Yes.
and no earnings. And we're looking at clicks and we're
Totally
dealing with a
agree.
$2 billion company. Okay.
Yeah.
So what I will push back really hard, I can say to you is, Paul, come on, man. This does not feel like a bubble.
No, it's not the same. When we were building back then, you knew who the posers were very easily. Now you have companies who are the real deal that are basically generating these ridiculous earnings, and I would agree with you, several of them. To your point right here, and I'll share this because I think this hits it on the head, and that was in reference to what you said about Wall Street's in denial, and in the situation of what is going on with Dell. Dell comes in, absolutely crushes earnings. Nobody saw this one coming, I don't think, for the most part, even though President Trump said, hey, Dell's a really good company several weeks ago, and then they go invest in it. But this is not like a normal hardware cycle. And remember, Dell, I mean, I used to go into Austin all the time when I was working with Microsoft, trying to make sure our software was on their machines. So that was the day. What do you look at when you think, all right, this could be just the beginning of the iceberg going up?
Okay. So what I do, and so, this is, Peter Thiel calls it the metagame. Okay. And what it is it's the game. It's the game above the game. What is really going on?
Mm-hmm.
And so I've been writing a lot about, and much more, about, history of economic thought, about, Hegel and what it means, Mackinder and Mahan and all these things about what is really going on in the Middle East. What is the president really trying to do? Right. And I was getting frustrated because people said, why are you writing about this? And I sit there and I go, okay, let me dumb it down for you. If this works the way it's supposed to work, you're going to have between $650 of earnings in the S&P at the end of 2031. Put a 25 multiple on it. Shut up.
Yeah.
I'm tired of you guys. Okay. But what is the deal? Okay, let's go to the top down, which is above this, right? Look, AI is a matter of national security, and we're in an arms race with China. Okay, 1. 2, cheap energy is the requirement, and secure natural resources are forcing that. 3, the state of Hormuz has put the marker on the table telling everybody that the United States, or Pax Americana, or the rules-based order that came back out of World War II is over. The United States that built the world after World War II, when it could have dominated it, needs to focus on home and needs to retool. we're going to have economic policies on the supply side that are going to supercharge real economic growth. Okay? And by the way, if we would just step back and think about the fact that Trump and Xi just signed a 3-year deal, well, we're going to play nice in the sandbox. And the forcing function for all of this is that there's too much debt and we got to pay it down. We can't pay it down. So we're going to run NGDP hot. Okay, nominal GDP. And then you full stop. And then you go, Ray Kurzweil talks about the fact that increasing returns to innovation. And then you sit there and think, okay, now I'm going to put my strategist hat on and give your listeners the inside, the scoop. Look, all you have to do is figure out what NGDP is going to be, nominal GDP, and that's your earnings growth rate.
Right.
For the S&P 500. Full stop. Full stop. But if the president is going to run the economy hot, then NGDP could be like 7%, which is historically high.
Yeah.
Okay? Then you go next step and you sit there and say, but the biggest weights within the S&P 500 are embracing this productivity cycle with AI. And when you do that, that 1-to-1 ratio between NGDP and earnings growth rate breaks. And I pick 1.5, right? It might be 2, it might be 3. Paul, earnings this quarter, this year, 16%.
Yeah. Crazy.
Right. So and then I sit there and go, Paul, the model that all of sell side uses, that Wall Street uses, is assuming secular stagnation and slow growth and no productivity.
Yeah.
Right. So you overlay all of that on, and I just sit there and when we talk internally to the clients or the team, he says, shut up. Don't try. You can't. I can't remember what Besant said about the governor of California, but you can't teach stupid. Just ignore it. Position yourself. Ignore the noise, and everybody's going to wake up and run around. Let me give you an example. Okay, so there are really smart strategists. Remember, I'm on the buy side here. Yeah. So what I do is I am building a portfolio for you, Paul. My 8,000 target was marked in November. You have strategists that have changed their numbers 4 and 5 times this year.
Exactly.
Now, if you're an institutional investor, you can't change you're not doing asset allocation 4 and 5 times. These guys are useless. They're noise. So let's just think about this. There are some folks that are saying 8,200 this year, but their target for the end of the decade is 10,000. Mm-hmm. Think about what that says implicitly about the earnings growth rate for the rest of the decade.
Has to happen, yeah, for sure.
There is no growth. So he's saying we're going to be fine this year, and then there's going to be no growth, no productivity, and you can see it and you can game it. So what I'm trying to say is we are in a unique period of strong nominal GDP and productivity growth, which should give us earnings growth rate for this very unique short period of time. Very high earnings growth rate that the Wall Street crew will not model. And so go ahead.
How long do you think that would be, though? Where
That's
do you think
the big
that wins?
So where's the off ramp? So what I would say to you is I am using the big, beautiful bill as my marker on the road, which is 100% tax deductibility for CapEx ends Jan 1, 31. So remember, we're playing a game here. Earnings, the game has shifted on the income statement to benefit earnings at the expense of EBITDA.
Yeah.
Now, old guys like me can sit there and go, so now here's the two things that I would say are the forcing or where there's scarcity, right? If you listen to Dell's numbers last night, Guys
Yep.
are sitting there trying to lock in 4 and 5 years contracts with Dell because, and this is, they use these terms, but then in real life, they just ignore them. The whole stack, Paul, has pricing power because of scarcity. And there's
Yeah.
scarcity because Taiwan Semi will not increase the amount of fabs or wafers that they manufacture. They are, by definition, constraining the cycle so that it's longer.
Yeah.
Okay? So if that is the case, let me just use Micron as an example. Micron's going to make
Sure.
$150 in
Yeah.
29. It's
Crazy.
still trading at a peg. When do you get multiple expand? When does it trade at a market multiple?
Yeah.
Look at Dell. So, and then we're not even talking about the supply side economics that Mr. Trump or President Trump's putting through, where the rest of the economy kicks in. That's why I agree with Tom on one point. This is going to be a unique period of time that's going to be that fundamentals. This is not the 90s, because there
Right.
weren't fundamentals.
None.
There
Yeah.
are fundamentals that this is going to be a market for the ages. And you've got to ignore the noise, because just last September, I mean, my God, go back and look at the tape. All
Yep.
the pundits were saying the cycle was over, and that's
Yep.
what you heard from Micro's.
Exactly.
And they said, "Hey, and where's Michael Burry?" And it's like, "Hey, it's all over." I mean,
Yeah.
hey,
Yeah.
here's the fact. Think
Yeah. That
about
was a big miss.
it's basic, right? That he's sitting there saying the amortization of old chips isn't. They're amortizing it 4 years, and it should be 2. And then you're sitting there going, "But wait a minute, I can't get the new chips, but I got to get into AI. So I'm going to pay for the old chips." And all of a sudden, those old chips are good for
Are
8 years.
valuable. Yeah.
Doesn't the debt problem go away then?
Well, you're dealing with, yeah, and you're dealing with the issue that I think a lot of people miss. And because remember, Dell, spectacular integrator, a logistics king, they don't necessarily own the IP driving this boom. I would still put that in NVIDIA or AMD, et cetera. But they are the foundry. And this is the difference that I think a lot of people don't get, is that compute power is going to be driven out of a lot of the hardware side of it, which is why you're seeing Micron, why you're seeing Dell. And if you guys know anything about just what's going on with Apple right now and the Mac Mini, I've never seen Mac Minis on back order for 6-8 weeks. They are. And the reason is they're using these for these little Claude bots, et cetera. But the point is we haven't even seen retail adoption of AI yet, which is where the hardware phase comes in, to your point. And people will be looking at alternatives for this. Same thing's happening with memory. The memory companies are absolutely, if you're trying to buy NVMe memory right now, it's almost untouchable because there's hardly any of it out there. So this is the issue I think you're hitting on, which is what makes this so different than when we had PC gravity, which was, just the equipment eventually dying off versus what we'll see now. So big difference here for sure.
I agree. And what also happens is, like every cycle, people recognize that there's pricing power, and we go for the junkiest
Yeah.
companies, and they're going to go up 10 times. And they're going, and what I want to say, hey, folks, there is going to be a cycle. Let me just be clear. It's just
Yeah.
going to be longer, right? It's going to be longer, and you can just see it, touch it, feel it, taste it to see how this thing is going. And so what we're doing, and I'll be honest with you, Paul, what we're doing, I'm shifted because I have beaten this drum. I am exhausted. We've been right. We've been making our clients a lot of money, but you kind of touched on it. In one of the questions is, where is that off ramp?
Yeah.
Like, where do you get the point where you just sit there and say, it's over and we're willing to leave 20% on the table?
Mm-hmm.
And we're but it's like wafers. It's what Taiwan Semi and what's happening in there, and it's energy. And I think the interesting thing that we haven't even seen is Orbital compute.
Sure.
I just think this what people are, and Terafab. I mean, Elon has yet to supercharge this theme. And, first off, Terafab, he's going to build these big fabs, which is code for get things out of Taiwan, folks.
Right.
Right. And two, think about it. I don't know up here, like you go, we were asking about vacations. Like, so we'll go up to Northern Ontario, a cabin, and at night the stars are wonderful and you can see satellites, and a
Yeah.
satellite just looks like a star going across. And
Mm.
then you've got Starlink. And what's Starlink? Well, it looks like 10 stars going around across the sky, right? Well, Starlink is basically, in my opinion, is basically a beta test for orbital compute. Take out those satellites and put in racks,
Yep.
connect them with lasers, and then all of a sudden they cooling in space and solar power, right? And look at what happened yesterday with Mr. Bezos' rocket company not basically being able to get off the platform.
Yeah.
He's got, SpaceX has got what's SpaceX's moat? What is it?
Yeah.
It's orbital compute. And what is
No
also
doubt.
SpaceX building? Massive integrated foundries. I mean, we are just so early to me into where this is. We're not into inference AI yet.
Yeah.
We're still really early. And so what I just try to say to folks is, I know this is weird, but I just try to say for investors, because typically we have our typical client is they've made their money,
Right.
right? And so you don't have to be fancy here, and I mean that. And so what's going to happen is, and this is my bias of the 90s, is people are going to get really fancy and miss the big thing. And you don't have to. You can just buy the S&P 500 or the NASDAQ 100, or you can buy these big high quality names, and you don't have to worry about it. This is
Yeah.
more to me about no cash, get exposure to beta, and then on the other side, if you're tactical in manner, pick out the gold standards of these asset classes.
Yeah.
And when they go, one asset class goes, or one sector goes parabolic, you trim and you buy
Yep.
the stuff that hasn't moved.
Yep.
And that
Exactly.
would be, so right now I'm sitting here saying, like, I got people freaking at me when I was saying sell oil and gold going into Iran. And they're asking me about, do you like oil long term? I go, yeah. And I think ExxonMobil is a world-class company. Their earnings growth for the next 4 years is zero. Why do I want to own it?
Yeah.
It's had a great run. Why wouldn't? And then you sit to go, where would I buy? I go, I'm looking at the charts. I'm looking at Bitcoin. I'm looking at crypto. I think that's the next one to run. I'm looking at Microsoft. I think
Well, it's
software.
definitely suppressed
Beg your pardon?
crypto overall, and to a certain extent, some of the tech companies that you just mentioned, such as Microsoft.
Well,
What
look at
about
NVIDIA.
this?
NVIDIA's chart has still been in a consolidation pattern.
Yeah.
That's cheap.
Yeah.
And then
Yeah.
but then you go and you get worried because on the other end, you've got these companies because it's power, right? And you look at companies, I love GE Verona and Quanta,
Right.
right?
Right.
They're very expensive, Paul. There's got to be
You
some type of, does Micron start trading at that multiple, or does that come down? And then you sit there and go, where's the risk?
Yeah.
Well, the risk is that when you get a proof of concept of SpaceX putting up orbital compute, then these 100-time earnings companies, even though their businesses are fine, maybe they don't get the extreme multiples that they have right now.
Right. Yeah. Well, and that's something that, we're still diving into some of these companies that are kind of on the fringe. One of the moves that we've been moving on is the ASTS, which is kind of interesting when you look at Space Mobile, what they've been able to do. And it's been just skyrocketing over this last 3 weeks upwards as they start to launch more satellites, mainly because I think we're seeing companies realize, or investors realize, there's going to be adjacent space tech that is going to happen now, and companies are going to win in that area. So interesting stuff for sure. When you look at the most recent hit on SpaceX, I don't want to say hit, but SpaceX, this was a statement by Eric Balchunas over at Bloomberg, and he said something that was kind of interesting here. Let me jump over to the tweet real quick so you guys can kind of see. SpaceX being added to early indexes is like the NBA changing 3-point line. this is kind of the metaphor they were talking about, but basically they're talking about the ETF IQ yesterday. So the issue was whether or not SpaceX should be going into ETFs this early. What would be your opinion on that right now?
I I would not have a problem with it. I think what the folks have to recognize is that rules within indexes are not etched in stone.
Yeah,
And, you know, I could easily see, you know, SpaceX and Anthropic in the index. And
interesting.
I would hope that they would get in the index, and I hope they would get in the NASDAQ 100 as well, because
Interesting.
it
Okay.
would really help the average investor get
Get
exposure to
exposure. Yeah.
two very dynamic companies. I'll
Yeah,
put
for
it that
sure.
way.
Well, and there's still a lot that I think has to be done in terms of roadmaps for those companies, but the upside is definitely there. It's much like, and to your point, with SpaceX, there's a good opportunity here for where certain things are profitable, some things are not. And I think with Anthropic, it's still the potential of where it could be going. I want to jump over to what Besant has been talking about in regards to Kevin Warsh. Um, Reporter asked him yesterday, where does he think this is going to land in terms of the position on the Fed? Are they going to, come in with rate cuts? Is it something that we could see coming down the pipe? What is your current position right now on Kevin Warsh this year for rate cuts?
Well, my opinion as an economist, if I was on the Fed and I'm not,
Mm-hmm.
I would sit there and go, I want to get to neutral. And I think neutral is 270. In my opinion, it's 275.
Okay.
Okay. And then I want to sit there and I don't want to touch it. And I want to start weaning society and the economy off of this Keynesian toolbook that we've had since Ben Bernanke got into power.
Mm-hmm.
So my whole argument from the get-go is let's get to neutral and get the economy. And if we get, go to neutral, get the 10-year to where the 10-year goes, get that slope of the yield curve. And if you can't afford a house or your house can't get sold at that level, so be it. We need this period of cleansing and a fair start of where that line is. So that's what I would. And then, in this environment where we have excessive amounts of productivity growth, I don't think we need to have the balance sheet as big as it is. But it is a conditional reduction. I would wait for the economy to get hot, and then I would start contracting the balance sheet.
Okay.
That's my opinion. That's always been my opinion. I think Warsh is like that, but the point I would make to you is, look at, I mean, and how Keynesian and how open minded is the Fed?
Mm-hmm.
What is the institutional pushback going to be? Look at, there is no, if you go back when I got you back to the 90s, the gold standard used to be the 5-year forwards.
Right.
It's at 224.
Yeah.
That's right in the midpoint of the data set.
Mm.
Look at trimmed mean. There
Yep.
is, there is no inflation. Then I'll put my economist hat on, my old, when I was getting my PhD, I taught, right? A change in the relative prices because of a supply shock is not inflation. It infuriates me that people on the Federal Reserve, and I could go through the whole name, they should all be ashamed of themselves. And you can all, Paul, we could sit there and say, let me be more blunt. Those people on the Federal Reserve Board that have a PhD and think that a supply shock is inflation should be ashamed of themselves.
Sure.
The problem we have, and I'm going to blame Elizabeth Warren on this one,
100%.
is the fact that we got people making interest rate decisions that aren't subject matter experts,
Mm-hmm.
that don't even understand what I just told you or what our star is, who knew get Wixell is. Like I'm a third-rate economist. I have more economic theory on my baby finger than some of these people do.
Yeah.
Right? And I don't mean that so you know, what is he going to do? He's one vote. I am worried. You think it's bad down there when you've got 4.5%,
Yeah.
Atlanta Fed saying you guys are going to grow at 4.5%. I'm back here. I'm back here in Toronto. The economy, the economy's in a recession.
Right.
And the Bank of Canada is talking about raising rates.
Yeah. Yeah.
You know,
I saw your tweet on
it's
that.
bizarro. We are living, these Keynesians, we're living in a bizarro world here, right? And, gosh, if there was ever, there's an old question, a very important question, rules versus discretion in terms of monetary policy. Boy, oh boy, given the Powell, Yellen, Bernanke escapade, we can put Macklin up here. I'm
Hmm.
voting for rules because these folks are incompetent.
So you're at a point of where, well, okay, but you didn't answer on Warsh. Warsh, is he? I know he's one vote, but does he have the power to shift the thinking at the Fed? Because that's his basis. Is he's coming in with new policy and a whole new frame of thought.
I I would hope that he could convince the PhDs on the board that he is just giving, he needs to basically influence folks that should know better.
Yeah.
I can't help you for a regional Fed president that has an undergraduate degree from Stanford, doesn't have a graduate degree, mostly is very intelligent, but has no, think about this. We have people making interest rate decisions that do not have a graduate degree in economics. Think about it if that was the Supreme Court and you had
Yeah.
somebody making a Supreme Court decision that was not an expert in constitutional law, that was a lawyer.
That's
Think about
ridiculous.
that. Think of
That's
the
ridiculous.
paradox and the irony that's going on. And I blame Elizabeth Warren for this, right? I mean, I just, it's unbelievable what they have done. Diversity of thought means having a Keynesian, having a supply sider, having a monetarist on the board. Diversity of thought is coming from the school of thought, not what their sexual orientation is and what the color of their skin is, right? And I'm not saying, so you don't have a diverse board.
Yeah. Yeah.
And I don't mean that in a disrespectful manner, but ECB is the same way. Bank of Canada is the same way. Bank of
Hmm.
Japan is the same way. And the pendulum is finally going to start to shift so that we get another view that is based on fundamental economic theory, which has lacked central banking. And here's the thing about the MSN and their acolytes. Nobody's willing to call them on this.
Yeah. Yeah. Well, and I think the point that so many people are trying to understand is the variations that we have seen in the past Feds, Trump's term, too late Powell, what we've seen all the way back to Bernanke, et cetera, that has rolled out pretty much a history of what the U.S. has had to deal with, because these are all reactionary measures that most of the economy kind of flies into. You look at the inflation numbers. I'll share this with everybody so they can kind of see at least what's showing out there right now. This is current inflation numbers. CPI 3.8, highest since May. PCE inflation 3.8, also highest since May. And then we had PPI at 6. This was the highest since March of 23. When you see these numbers, and then you look at the short-term service inflation, shelter, energy, gas, etc., how do you argue that the Fed should cut rates?
A change in the relative prices, which is what that chart shows, is
Mm-hmm.
not inflation. And so we keep mislabeling what we are doing, what we are experiencing. That is not inflation. A one-time change in the relative price level is not inflationary. It is a change in the relative prices. So
Mm-hmm.
you have framed it wrong. I mean, I'm not saying the prices haven't gone up. Do you understand?
Sure.
Yes,
Yeah.
but that's caused by a supply shock. Now, here's the point. Think about this. Look at housing starts and look at the real estate market.
Right.
What is causing the change in relative prices that you post is
W-
not affected by the sector of the economy that is interest rate sensitive. In
mhm.
fact, the interest rate sensitive sector of the economy is in a recession, as the Secretary of the Treasury has said ad nauseum. So
Yep.
if you're on the board and you're sitting there saying, we are going to apply a strategy that misdiagnoses the problem.
Right.
So I can, and that's where I go. Up here, what I'm doing is I'm invoking, because I'm at the level of frustration. I'm invoking the Monty Python skit of the
Okay.
dead parrot,
Yeah.
right? And John Cleese walks in and says the parrot's dead, and Palin says no, it's not, and this, and like I'm tired of talking. Like I am tired of sounding provocative when all I'm doing is remembering what I taught in second year macro and
Yeah.
having
Yeah.
the rest of Wall Street go around going, "Whoa, my gosh, what are you talking about?"
Yeah.
Right?
Yeah.
Tariffs don't cause inflation. Wages don't cause inflation. Okay? And so let me ask you a question. If they raise rates, I think you had one of my charts, the 5-year forwards, that
Right.
is long-term inflationary expectation. They are not buying that this is inflationary. That should
Mm.
be ripping higher, right? But what we use now, which is a joke, is a University of Michigan inflationary expectations index,
Right.
which is politically biased.
Yeah.
Let's
Yeah.
go ask a bunch of Democrats if they think inflation is going, and we're going to call this an objective survey. So that's where I also come out and I say we live in a post-factual world. And when I say that, I get silence on the end of the phone.
Well, that's the point I'm getting at is, I think Warsh may have a window into this. The real question is how does he spin the story to get these governors essentially aligned with where and what is really happening in the economy? You know,
Well, yeah, yeah. I mean, let's take it to another level. I mean, let's you and I, we're in Star Trek, and let's go and teleport into the White House,
yeah.
right, at a cabinet meeting, and you and I get to sit there, and we're at the table, and I'm sitting there going, help me out here. I can give you the theory, but you know that everybody is going to interpret what you're doing as inflation, and the
Hmm.
Fed may raise rates, and you're talking about affordability, and gas at the pump is going to be $4, and you think that's not going to have an effect on the midterm elections. Like,
Yeah.
why are you doing this Iran thing right now? Like,
Yeah.
so to help me out, like triangulate. Why aren't we getting off of an off ramp? Because I could talk to you about the fact that, oh, we need the agreement. And I'll sit there and go, well, oh, yeah, how did that agreement work when China got early extension into the World Trade Organization? Well,
Yep.
how did that agreement? Or in 2004, when Iran signed the last nuclear nonproliferation treaty? Or back in the 90s when we got, I think it was Ukraine to sign the Budapest Accord that said,
Yep.
we are going to guarantee your borders if you give up nuclear weapons. Like these long-term
BS.
agreements, let's be honest, aren't worth the paper they're written on.
Yeah.
So why aren't we doing an off ramp? Like I can easily pitch that to you about
Yeah.
what the president is doing and making it a high risk maneuver. Because let me
Do
tell you,
you
Paul,
think
if he
though that
loses in the midterms,
yeah.
then we need to reevaluate our secular growth theme into the end of the decade. He is playing a
Interesting.
very dangerous game right here.
Interesting. All right. Well, there you have it. If he loses in the midterms, which I think is the concern right now with what has been rolled up on it, do you feel like this is coming more from the cabinet members and advisors, or do you feel like Trump is still trying to just look as though he wins on trying to get this off ramp done?
I don't I really don't have a horse in the race. Like
Yeah.
I really don't know. All I know is, given what we were talking about, how the street and a portion of the credit market misidentifies a relative price change as inflationary, as the 24/7 news cycle says inflation, inflation,
Yeah.
inflation. As you know, you look at we're expecting rate hikes. We're expecting rate hikes into the U.S. economy when the housing market is in a recession. This is the noise that is being, I would say, amplified.
It's terrible because
by the
you're exactly
policy
right.
of what the president is doing. And so I thought, so I get what he's doing. I don't know why he is not expediting
Exactly. Yeah.
what the next step is. Whether it's, are you, Mr. President, just do something. But this, there's this old rule in the markets, right? It's not the yeses and the nos that will kill you. It's the maybes.
It's the
And you know what? Maybe, there are so many nuances, Paul. Like, for example, it just, why isn't he getting it now? What does he get from this? Why is he balking at having the enriched uranium going to China? Like, what is it that he is going for that he wants it to be in, Americans' hand? And let me be clear. Here's the hard part, but where I said there has to be a justifiable reason. Okay. I just wish
you would
think expedite the process.
Yeah, you would think there would be, and I think the scenario that's playing out right now is this goes back to timing too, because I've noticed within all of these cycles of many of these races, even when you look at Thomas Massey's recent loss, many of these cycles are very time sensitive. If you don't land them right in terms of the time frame, the American people forget very easily, and money being spent on many of these campaigns dries up quickly. So you've got to hit and strike while the iron is hot. It may be simply a timing scenario that they're trying to somehow put in play here. Sure.
I mean, that will if he's running on affordability in the midterms, I mean,
that's a problem.
All I'm saying, I'm trying to be objective, because you sit there and go, oh, you love Trump, you hate, I'm saying, no, I'm an objective researcher, and I'm sitting here going, he's putting it on the table. And let's be clear. The other thing is, the dragging out of the Clarity Act, as far as I'm concerned, is an embarrassment.
Oh, it's huge.
Let's be clear about that. The crypto industry, or the crypto, really supported the president in the last election, right? With boots on the ground and money. Look at where crypto is today. It has been wiped out. He has not come through on that. And I'm sorry, a tweet isn't coming through on that.
Bingo. Well, and I think that's where we are right now, because Clarity, of course, is sitting on pretty much a deathbed. It's at 50% right now on Polymarket. If they don't get this across the line, that could be another major fail that could hurt him seriously in the midterms, for sure. That could hit. James, it's been good having you on today. Thank you so much for coming in. We're going to get you back, because I think as we get closer to the midterms, we may have a little different market to talk about, for sure.
Hey, okay? and everybody enjoy the 4th. Enjoy the 250th. Okay. Everybody have a good time.
All right. Thanks a lot for stopping in. We appreciate it.
Take care.